Hi everyone, in this walkthrough we are presenting our Alpaca market data and algorithmic trading terminal. The goal is to build an end-to-end systematic trading system using Alpaca for market data and Alpaca paper trading for execution. This is paper trading only and no real money is being used. Our system includes two Streamlit terminal, trading.py for live market data, paper account monitoring, strategy control and risk management. The second app, Streamlit app, backtesting.py, is for historical strategy testing and signal evaluation. At the repository structure or architecture level, the project is split into clear modules or code files under source code. Config.py here loads local credentials from .environment, which is excluded from GitHub, and data connector.py creates the Alpaca clients, including a trading client with paper trading. Historical.py fetches historical OHLCV data, and the live codes.py manages live bid, ask, and last traded updates. Strategy logic is separated from execution. Indicators.py builds technical indicators. Strategies.py creates rule-based signals. Features.py handles ML features and feature engineering, the building of feature matrix, and also PCA for dimensionality reduction. And models.py, finally, it's gonna generate the long or flat signals based on the logistic regression model. Backtester.py simulates the portfolio. Metrics.py computes performance and execution, turns signals into Alpaca paper orders. Whereas the last module we have, risk.py, enforces an account level risk control, which is the last step before any order becomes live. All of these strategies are systematic and long only. The first rules-based strategy is trend following. It buys when MACD is above the signal line and price is above SMA 200, then exits when momentum or the long-term trend weakens. The second is mean reversion. It buys when RSI is below 30 and price is lower than the lower Bollinger Band, and then exits when RSI is above 70 and price is above the upper band. The third is a stricter multi-factor strategy requiring trend, momentum, and volatility breakout confirmation before entering. All the details about these technical indicators and strategies are available in the documentation, which you can see here. Our strategy 1, 2, and 3, and the indicator used to develop these strategies. The ML strategy uses 5 years of daily OHLCV data. It builds return, rolling statistics, trend indicators, momentum indicators, volatility indicators, and volume indicators. The target is whether the next day return is positive. The feature pipeline standardizes the training data and applies PCA, keeping enough components to explain at least 80% of the variance. To avoid leakage, the split is chronological. So earlier rows train the model and later rows of data are held out for testing. The logistic regression model goes long only when the predicted probability of a positive next day return is above 0.6, and this threshold is also configurable. Otherwise, it stays flat. For execution, the system reads the latest signals and compares it to the current Alpaca paper position. A long signal with no current position creates a buy plan. A long signal with an existing position holds, and a flat signal with an open position closes it. A flat signal with no position does nothing, just stay as it. The strategy capital allocation defaults to 10% available cash, and the orders are submitted only through the Alpaca paper trading. Risk management sits between signals and order. The default stop loss is 20%, and the default maximum allocation per position is 25% portfolio value. In enforcement, if enforcement is turned on, buy orders can be capped or blocked, and stop loss breaches can be triggered into closing orders. This key idea is that the strategy proposes a trade, but the risk layer is the module that decides whether it is allowed. All these details are available in the later UI demonstration. Now I'll walk through the UI. So this is the trading terminal we have. On the left, the user can select or enter the ticker of any stock or ETF listed on the US market, select the time range they want and the tick size. The user can also overlay any technical indicators on the charts. For example, I will overlay a few for the purpose of this demo. And the display chart then renders the candlesticks volume and the selected technical indicators. And above the chart, there's a live coding strip that reflects the bid, ask, and last traded price. On the right side, the paper account panel shows the current paper portfolio, the portfolio value, buying power, unrealized and realized P&L. And down here, we have the available positions that are managed by the trading strategy. So there are currently 2 positions, as you can see in this demo. You can see the percentage of asset allocation, the market value, like current price, average price, and also the P&L values. The system also features a transaction log that includes all the Alpaca order, recent order history, and the actual order events log that came back from Alpaca, and also a local user side execution log. This is important because the user can now see both the broker side and the system side record. In the bottom, we have the trading strategy management panel. The user can start an algorithmic trading strategy by choosing an equity and a strategy type. For example, I'll choose a random one with a rule-based strategy. In this case, the user can select the amount of or the percentage of capital that is allocated to the strategy, and then click start. The app then fetches the data, generates the latest signals, checks the paper account for like fund availability, and passes through risk check, and either submits a paper order or explain why no order was sent. For each of these active management like strategy, there's a separate like kill switch stop that controls each of these positions. The stop cancels all open paper orders and submits a closing request for any open positions. This gives the user clear emergency control from the user interface. The risk control section also lets us turn enforcement on or off, adjust the stop loss percentage, and also the maximum allocation per position. If enforcement is turned off, the system only flags breaches. If the enforcement is on, it can cap on any new buys or close the position in the cases of the stop loss percentage is breached. Risk events are also logged in the local execution log here, so the user can see what happened and when. Now moving on to the separate backtesting terminal for the user to test the strategy performance on historical data. Here, the user selects a ticker or resolve a ticker by searching the equity name, pick the time range, tick size, and the number of indicators they want to be overlaid on top of the chart, and also the number of strategies to be compared. For the rule-based strategies, the terminal plots the buy and sell signals on top of the LCV bars, compares to the portfolio value against a benchmark of buy and hold, and then shows a metric table and plots the drawdown to show the maximum drawdown of each strategy compared to the benchmark. If the user turns on the ML logistic regression, the machine learning strategy as well, another panel will be rendered at the bottom At the same time, the user can configure the ML probability threshold, which is the probability of the next day return being positive, and also the test split proportion of the chronological train test split. For the train test split, 20% of the testing data would be set to the default, which roughly corresponds to last year, or as you can see, 2025 to 2026, as we only fetch the daily bars of the past 5 years, so 20% is roughly like 1 year. The chart will then show the signals overlaid by the selected technical indicators above, the explained PCA variance chart, the portfolio performance compared to the benchmark of buy and hold. Just as the rule-based strategies, the performance metrics table and the maximum drawdown charts is also available. And in conclusion, the appropriate expected user workflow is that they research in the backtesting terminal first and then use the trading terminal for paper execution and monitoring. This type of separation helps prevent the users from blindly trading a signal that has not been properly tested. The main limitations are that the backtest do not fully model transaction costs, slippage, taxes, dividends, or market impact. The machine learning model is intentionally also simple, a logistic regressions on technical indicators. It is useful for demonstrating the pipeline, but it is definitely not enough to claim robust alphas. Potential improvements of the project would include modeling transaction costs, adding walk-forward validation for the ML model, allowing limit orders, and implementing portfolio-level risk constraints. A longer internal testing period is also recommended before the system is considered production-ready. The biggest lesson learned is that a trading system is so much more than a good model. A working system needs clean data, safe credentials, clear signal logic, risk checks, execution rules, logging, and a well-designed UI. We also learned that beating a simple buy and hold benchmark can be difficult, and even reasonable strategies can struggle once realistic frictions and risk controls are involved. At last, again, everything shown here is in the Alpaca paper trading mode only, with no real money being used. Thank you so much for watching.